Hey everyone, welcome back to Zaki Crypto Update, the place where we break down the latest trends and deep dive into the crypto markets to give you the insights you need. Today, we're taking a close look at Shiba Inu and its latest market action. If you're new here, don't forget to hit that subscribe button and ring the notification bell so you never miss a beat on the hottest crypto news. Let's jump right in. Before we begin, a quick crypto disclaimer. This video is for informational and entertainment purposes only and should not be taken as financial advice. Always do your own research before making any investment decisions. Alright, let's get into it. Shiba Inu, one of the most talked about meme coins, is currently holding steady at around $0.00012. Despite experiencing a downward trend that saw it breaking several resistance levels, the coin is now showing early signs of a rebound on the daily chart. This could be a turning point for Shiba Inu as market participants begin to scrutinize its potential recovery. At this price level, many traders are on the edge of their seats, watching every little fluctuation for hints of a breakout or a deeper slide. And one of the most fascinating developments in the space is what we're seeing with the burn rate, an astonishing surge of 1,125% in just the last 24 hours. Now, you might be wondering, what exactly is this burn rate all about, and why is it important? Well, in simple terms, a burn is when tokens are permanently removed from the circulating supply, usually by sending them to a designated burn address that's inaccessible. For Shiba Inu, this isn't just a minor adjustment, it's a significant move. Imagine you have a giant jar of marbles, and every time you remove a few marbles, the jar gets lighter. In theory, if you take enough out, the value of each marble could go up because there are fewer marbles to go around. That's the strategy behind the 1,125% surge in Shiba Inu's burn rate. Over the past day, about 20.6 million Shiba Inu tokens have been removed from circulation, including one massive transaction that burned 19.44 million Shiba Inu. Now, if you're thinking this should lead to an immediate price spike, you're not alone. But the reality is a bit more nuanced. Despite this impressive burn, Shiba Inu's price remains stubbornly steady at around $0.4012. So what's going on here? On one hand, you have this aggressive reduction in supply, which should theoretically drive the price up. On the other hand, the current market conditions and investor sentiment seem to be keeping the price anchored. Let's break it down. The total supply of Shiba Inu currently stands at an astronomical 589.25 trillion tokens, with about 584.34 trillion in circulation. With such huge numbers, even burning millions of tokens might not drastically shift the supply-demand dynamics immediately. However, every burn adds up over time and could potentially pave the way for higher price levels if market sentiment shifts favorably. So, is this a classic case of supply reduction without immediate price action, or are we on the verge of a more significant correction? It's a question that many traders are asking right now. Let's dive a little deeper into the technicals. Currently, Shiba Inu is trading at $0.401,174, which marks about a 3% surge in the last 24 hours. That might seem like a modest gain, but in the volatile world of meme coins, every fraction of a cent counts. Now, the critical resistance level to watch here is $0.4013. Shiba Inu has been struggling to break through that ceiling. The MACD, one of our favorite momentum indicators, is showing a weak trend with the MACD line dipping below the signal line, hinting at bearish sentiment. Additionally, the Relative Strength Index, RSI, is sitting at 38, which is below the neutral 50 line again, a sign that the bears are still in control. If the bulls can rally and push Shiba Inu above the $0.4013 threshold, we might see a breakout that could propel the token towards the $0.4015 mark. But if Shiba Inu fails to hold its current support level of $0.4012, we could see a slide back down towards the lower support of $0.401. Moving beyond the technical charts, let's talk about the on-chain data. There's been a noticeable surge in on-chain transactions marked by losses, which is causing a bit of alarm among traders. In fact, Data from the sentiment chart indicates that on-chain transactions and loss have surged to a whopping 1.93 trillion Shiba Inu. That's a clear sign of widespread panic and increasing selling pressure among holders. This sharp rise in loss transactions correlates strongly with the overall price dips we've seen recently. It tells us that many investors might be quickly offloading their positions, fearing further declines. In other words, while the burn is reducing the overall supply, the current sentiment among holders is leaning bearish, which could stifle any short-term upward movement. It's a classic case of conflicting signals. On one side, we have a significant supply reduction through burns, and on the other, we see mounting bearish pressure from on-chain sell-offs. The next few days will be crucial in determining which force prevails. So what's the bottom line? Can Shiba Inu capitalize on its burn strategy to reverse its current trend, or are we headed for further decline? Here's what I think. If the bulls manage to regain control and push Shiba Inu above the critical resistance of $0.4013, we could see a renewed interest from investors. A breakout could signal that the market is finally recognizing the long-term value of a reduced circulating supply. This would open the door to testing higher levels, perhaps even approaching the $0.4015 mark. On the flip side, if the token fails to hold its current support and the bearish signals, like the low RSI and negative MAC persist, we might see further downward pressure. A decline could force Shiba Inu closer to the $0.401 support, which would then potentially trigger a cascade of selling among nervous investors. At the end of the day, the crypto market is notoriously unpredictable. However, the key takeaway here is that every piece of on-chain data and every technical indicator provides us with clues. For those holding Shiba Inu or considering an entry, it's essential to monitor these levels closely and stay updated on both technical trends and broader market sentiment. Let's sum it all up. Shiba Inu remains at a critical juncture, balancing on the fine line between a potential recovery and further decline. The 1,125% jump in the burn rate is an impressive move that shows a clear effort to reduce the circulating supply, but it's not enough on its own to lift the price, especially when market sentiment is still leaning bearish. For traders and investors, the primary takeaway is to stay vigilant. Watch the key technical levels and pay attention to both the burn rate and on-chain metrics. These elements together could signal the next big move for Shiba Inu, whether it's a breakout to new highs or a slide into bearish territory. Now, I want to hear from you. What do you think is next for Shiba Inu? Are you optimistic about the burn rate's potential to drive a rally, or do you see more downside risk? Drop your thoughts and predictions in the comments section below. I love reading what you all have to say, and your insights make these discussions even more interesting. If you found today's breakdown valuable, please give this video a thumbs up and share it with your fellow crypto enthusiasts. And if you haven't already, subscribe to Zaki Crypto Update for more in-depth analysis, breaking news, and expert insights into the ever-evolving world of cryptocurrency. That's all for today's update on Shiba Inu. Remember, the crypto market is always in flux, so it pays to stay informed and be ready for anything. Until next time, keep your eyes on the charts, do your research, and as always, happy trading.